Bill Gates famously said, "Banking is necessary, but banks are not." And this suggests a future where traditional banks must radically rethink their role in the financial ecosystem. How can South African banks break down their internal silos and their legacy structures to work more seamlessly with the FinTechs that are really evolving this landscape? And what are the key cultural and structural changes that are needed to make this a reality? Welcome to the Monocle Banking Podcast, curated by Monocle Solutions. Whether you're a financial professional, enthusiast, or just interested in the political economy, you've certainly come to the right place. Now, while South African banks have poured billions into digitalization, the reality is that it's a bottomless pit of need because old technology cores keep banks stuck in perpetually having to modernize old systems, which is time-consuming, it's expensive, and it certainly prevents quickly launching new digital features. Instead, banks need to consider implementing coexistent cores where they start plugging in modern API-enabled systems alongside the existing legacy systems that they've got to start offering new digital products and then to migrate to the new core over time. That's certainly the strongly held view of my guest this week, co-founder and CIO of enterprise software development house Global Kinetic. He's also CEO of Global Kinetic's open banking platform, FutureBank, an entrepreneur by nature and a keen business strategist in FinTech, a software architect, and a leader with particular interest in agile methodologies and also innovation at its core. Sergio Barbosa, great to have you on the podcast and to chat about something that's very close to your heart. But firstly, tell us a little bit more about your career journey and what led you to your current roles at Global Kinetic and FutureBank.
Thanks for the intro and thanks for having me on. It's great to be chatting again. Well, sure. I think I started cutting my teeth in the fintech space around the turn of the century, working in quite a famous local South African challenger bank outfit called 2020 Online Bank. I'm not sure how many people remember
Yes.
20 Online Bank, but part of the software engineering team that built the bank back then. And it was really an exciting time. And there's a thread that continues from that time till today, I think, in what we were doing, at 2020 Online Bank with Christa Darvel as the CEO. And I mean, this is a sort of anecdote, but, we were agile teams inside a bank before agile was even a thing. We were doing something called extreme programming. And, most bank CEOs would say nothing extreme is coming near my bank. And, Chris, the sort of entrepreneur and innovator that he is, said, that sounds great, go for it. So we were real pioneers in the way we delivered software for the bank circa 2000. And also that was very formative in the ideas around what we see today in banking with modernized middleware and coexistence of cores that you were mentioning, where 2020 was the challenger bank in the sense that it was a bank operating outside of the banking license and banking infrastructure that it was working with, Sambo at the time. And then Standard Chartered came in after the Sambo went to curatorship, and the rest is history. But from a technology perspective, we were working around the perimeter of the core banking systems. And so we, the very first views I had around building aggregation capabilities around a core system of record, which just seemed this immovable piece inside the regulated banking institution. You had to work around it. You couldn't move the things inside because they were baked in. And it's funny to see that today, 20 years on, a lot of those systems are still there, still in place. And, you can imagine what happens to 20, 30, 40-year-old COBOL code, that's still running in ATM infrastructure and big core tier one banks today. So, those were really informative years, and obviously going on to start Global Kinetic off the back of building, the first challenge, real digital bank in the Southern Hemisphere, I think it was at the time, to, delivering software in that integration space and channel space for banks and financial institutions. We've helped some of the real prominent players in the local market internationally. And, I kept finding the same thing over and over again, these core systems that were these immovable pieces inside the institutions. And so around about 2017, 2018, we productized a lot of our learnings into the platform FutureBank that we take to market. And it's all about enabling the coexistence of new age cores that can do things a lot, faster and quicker and more modern alongside the old legacy cores. So that from the channel perspective or the customer perspective, it's transparent to them. There's a single view of customer. They see 3 or 4 accounts in their bank app or their bank profile, but under the hood, there's, 2 core systems or 3 core systems, that are at play. Some really old and some more modern. So that's one way to go about it. But I think there's there's a more fundamental change that needs to happen in the industry where, you can't just keep putting things around these core systems and wrapping them. There needs to be a real thought out strategy to limit the utility of the core systems to the
Right.
point where they are necessary, and they are necessary.
I want to interrupt you. No, but I want to interrupt you on that point, and I love it. It tells me a lot about, where you came from, obviously with 2020, Christo Darvel being the grandfather of FinTech, as we know, and then I see you did work inside Standard Chartered, which, acquired 2020 out of the Sambo mess, but you only managed just over a year, from what I can tell from your CV there, before you thought, no, I've got to do something else. But, I want to come back to your point about what we do with this core COBOL system. I had Paul Morley of Nedbank, who I'm sure you know, it's a very small community. And, he was talking about the fact that COBOL was still working soundly inside a bank like Nedbank, which has migrated quite a bit of its infrastructure to the cloud. And he reckoned that COBOL is going to be there forever. And kind of in the core of the bank, it's solid, it's well known. And there was this idea that we could just build around the core. You're saying we need to actually radically rethink and migrate to a new core. How do we do that?
Well, I think that there's a limit to how much you can build around. And I think coexistence is a great strategy. And I'm seeing it more and more in the industry to have middleware that connects the old with the new and then, enables the innovation and fintech disruptors to work or challenges to work with the banks. But I think that, there's a limit to what you can do there eventually. And I agree with him, that if it ain't broke, don't fix it. But it is consuming a lot of the spend that goes into maintaining these old systems because they are more expensive than working on the newer technology. So if you think about the IT spend that goes into the bank, a large portion of it goes into maintaining the old environment rather than innovating with the new. So, one of the strategies that you can look at is continuing down that route that they mentioned, which is, limiting the core functionality down to the core essence. But you'll always still have it in there if you don't do something about, migrating off that core into a new core, and there needs to be some incentives and drivers for the banks to want to do that. From his perspective, there probably isn't much of an incentive. It's working. Let's just leave it there. But I think the cost is then borne by the customer potentially that's not getting innovative features or innovative banking solutions as fast as they would if they weren't hamstrung by the speed at which the core system can be updated. So I think, the coexistence strategy is a solution. And during the coexistence projects, you can actually migrate customers from the old cores onto the new cores over time as card life cycles end, and cards need to be renewed. They can be renewed in the new cores rather than the old cores. There's certain strategies that the business can adopt to kind of migrate customers over from old to new over time. But I think that one of the main reasons that prevents these core systems from actually being lifted out of the institution is the integration downstream. It's the integration from the core systems into the central banks and into the regulators where they have to do their reporting and ensure that systemic risk doesn't enter in the system. That's why these core systems are so, if it ain't broke, don't fix it, And I think if there was in the same way, I'm not sure if this will work, but, just ideating around the idea in the same way that standards around technology have started to be adopted at the top end of the stack with open banking, PSD2 in Europe, where, it's standardizing how you call into the banks through APIs. Perhaps an approach could be to create some standardization around technology downstream. So how do the regulators and the banks talk to each other around a technology standard? And this sort of ties into the reg tech space, I would say. Yeah. But, you could use things like technologies like blockchain and central bank digital currencies to help standardize the reporting and the transparency of these core systems into the regulators so that if the technology is a bit more open and more standardized from the regulators' point of view and incentivized into the banks, and the banks will be more incentivized to actually up or deprecate and legacy core and adopt a new, more open technology standard, which just kind of reduces their risk exposure, which is why they have this old core systems there in the first place.
On that, the EU's PSD2 regulations have been a game changer for fintech integration. So I would imagine that you reckon we should and other African countries should pursue similar regulatory frameworks. If so, how do you think that could be tailored to the local context, though? Because a sense that I also get, specifically in the payment space, is that the banks talk about partnering with fintechs, but at their core, and no pun intended, they still see the fintechs as deeply competitive and potentially coming in and eating some of their lunch. And so while there's often talk about partnering with the fintechs at home, there's very little real substance in actually building out these partnerships, and they like to, for example, keep a lot of their proprietary data very close to their chest. They don't want to open up that data stack to competitors.
Yes, I agree. When you look at sort of the embedded finance use cases, or like the partnerships with non-banks and banks around, or in fintechs, are in this bucket, I would say. What I've seen is that big banks and smaller brands work better together than big banks and big brands. So when you try and see like a big MNO partnering with a big bank, it just slows down, and nothing really kind of moves because of that ownership of the customer and worrying about eating each other's lunch and all of those kind of things that you spoke about now. Whereas the smaller brands working with a big bank, or a small bank working with a big brand, is what I've seen work really well. The smaller bank, they own the license, they own the regulatory reporting back into the central banks and the regulator. So that's their asset, and the big brand has the customer. So it's a much more symbiotic relationship between the small bank and the big brand, and vice versa. So I think there is still a very big challenge there in terms of who owns the customer. That's really a business decision for the different territories and regions and how it plays out. But I think it's still unsolved on how the banks can work with fintechs and not worrying about them, like you say, eating their lunch. If I think about some of the examples in the US, WebBank being actually quite a low-tech fintech enablement bank, they really double down on the fact that they are a bank, they own the license, they own the regulatory environment. So they open up the partnership with the fintechs, but try not overcook it, not do too much on the tech side, and just really partner with the fintechs and enable them to do a low-touch integration. So they kind of realized their cause were going to hold them back. So they didn't try and do too much, So there's a lot of strategies, I think, that can make that work where both parties feel like they're still winning in a business deal like that.
It's very difficult, and it's a perennial challenge. It's a challenge that we haven't really got our hands around just yet. And Jamie Dimon, I think, of JP Morgan, once said that legacy systems are the bank's Achilles heel because of the things we've discussed. They limit innovation, they increase costs, and it just slows down your ability to respond to changing customer demands. And customers that interact digitally now expect the same immediacy that they get from the Magnificent Seven, the big tech companies, to be inherent in the big banks as well. So given this, how do you see South African banks overcoming not only the challenges posed by legacy IT systems, but also the challenge of partnering correctly with the fintechs? What is the ideal strategic framework that is so essential to making this work?
I think there needs to be an understanding of the customer journey from the bank's perspective in where the customer is interacting. I think embedded finance is used a lot as a buzzword, but it really is around understanding where the customer is, operating on a day-to-day basis. What are their pain points, and how is banking embedded inside their everyday lives? And not just the individual customer from a retail banking perspective. I'm also thinking about the small, medium enterprise. We've got such a vibrant SME market in South Africa where, embedded finance could play such a big role in bootstrapping the economy, from providing short-term loans to small traders to get to the end of the month so that they can, get the stock replenished in their stores, that they couldn't otherwise do if they didn't have some kind of lending facility, So understanding how to interface those real pain points with the financial institutions that provide those capabilities from a financial technology perspective. I think that's where the banks, I think, need to work with the fintechs, because the fintechs are operating in that space of the customers. They're understanding the pain points, they're building solutions. Like you can see the likes of Ozo and many of those fintechs in the local market that are succeeding immensely, doing so well. And they're really understanding what the customer needs. So for banks to appreciate that learning is being done by the fintechs and then work with them to provide those capabilities, I think that's where the banks can really take a step forward, in partnering around solving for the customer's needs in that regard, and seeing what they can do from their perspective to come to the party there, and if it means making bold steps inside modernizing their existing infrastructure to support that, then they should do that. And I think a couple of the tier ones in South Africa have started making moves. I saw a comment from Pim de Bruin and from Capitec on LinkedIn recently, where you're saying watch the space, and I think they're really taking it seriously to do some modernization around what they've got to support the fintech ecosystem, which is great.
You mentioned the potential for regulators to drive that modernization in the sector as well. Let's maybe double click on that. What are the specific regulatory changes that you would advocate for to help expedite this process, and how do you see the role of things like central bank digital currency, CBDCs, for example, influencing this modernization of banking infrastructure?
So I think to pinpoint a specific regulatory changes might be a challenge early on, but I think there's a project called, if I'm not mistaken, I'm not sure if the pronunciation is correct, but Project
Yes.
Kokatu by the Saab. And, projects like that are in the same way that we did RPP in the country, those projects where they invite people from the industry to help collaborate around regulatory frameworks,
In a
to
sandbox.
use more
Yeah.
modern currencies and sandboxes and things like that. Those are the things that I really think the regulator should drive out and work with the industry and private sector to help understand that landscape. And there's technologies out there for creating transparent transacting systems like blockchain. I know it's a buzzword, but it really could help. That type of technology could help create an open distributed ledger. A central bank digital currency could help drive some of those technology standards, which would then enable the regulatory reporting of these financial institutions back into the central bank in a more modern way. And by bringing some of those things out, that will then incentivize the core providers and the core systems it will drive the modernization from sort of under the hood, as it were. But I think it would start with the regulator actually putting some impetus behind inviting the industry leaders to these sandboxes and projects like Cocket to explore what technology changes or technology standards and frameworks that could bring into the industry to help drive this sectoral issue, I think, which is legacy core systems are still very prevalent and stuck, in the
I think that the ZARP stablecoin is an interesting example in the South African context.
Exactly.
What role do you see stablecoins then playing in the broader financial institution ecosystem? Because I think that could also overcome some hesitancy towards adoption and shift the culture that needs to change. Because we're talking a lot about regulation and obviously technology, but I think a big component of any change in any system, anyone who studies systemic change will tell you that it's not just technology, it's also a cultural shift. Yeah. So how can banks manage a transition? What role does leadership play in the process from a culture perspective?
Yeah, I think that's an interesting one, because sometimes the technology arrives before the ideas have arrived, if that makes sense. So if you compare the impact that something like blockchain as a technology had on the industry versus something like AI, we're still trying to find good use cases for blockchain solutions. Not that there aren't any, but within a matter of a year and a half, AI it's gone completely mainstream. It's in everybody's pockets and lives, and so the difference between two types of technologies entering the market and the cultural impact on that is, some can be completely pervasive from one day to the next, and another can take a really long time. So I think that there's a stigma around the usefulness of blockchain potentially around the financial institutions, and obviously Bitcoin's history is not shiny. So I think so I think there's some element of resistance there to say, well, but it's not the technology that's the problem. I think it's, like you say, the cultural approach to some of those technologies, be resistance to adoption and things like that. So I'm not sure how the banks internally can turn the tide on that sentiment. And maybe there's, again, not to put too much pressure on the regulators, but to kind of show that the technologies like blockchain could actually work, and things like stable coins like the ZARP could actually work to help. It's programmable money, it's programmable contracting at a financial level. Could this new technology help, with that open transparency and reporting that connects these core systems downstream, and to help them modernize? I think a changing of sentiment, again driven by the regulator, could help, because the stigma around a blockchain is still prevalent in the banking industry and crypto. It's not an easy one to solve culturally. So I think it will be hard pressed for the banks to have that cultural shift internally on their own. They'll need some help from the regulator.
I mean, Steve Jobs famously said that innovation distinguishes between a leader and a follower. And so if companies are not innovating, they're destined to become followers and not leaders. And ultimately, if you want to differentiate in the banking sector, where so much has become commodified, you've got to be a leader. You've got to be doing things that are slightly different, slightly better for your end customer. And I still feel that often when I deal with a bank, it's where the word silo was invented. And I know they love four-letter words, and risk is the one that's primary to banking. But I think silo should be the one that's primary to banking. There's still so much from an end user, consumer, customer perspective that can be solved for. So just as we reaching the end of our conversation, Sergio, what are the next big projects or innovations that you're excited about at Global Kinetic and FutureBank?
Well, I'm definitely excited about we were talking about earlier, the coexistence opportunities, where with our platform, we're able to introduce modern fintechs a lot more seamlessly into larger financial institutions that have, these core systems that are removable. And there's some amazing, capabilities that these new age core providers can bring into the financial institutions and allow them to surface that to their customers. And I think digital issuance is definitely one of them. If you think about the ability to instantly issue in the tokenization space, to instantly issue card credentials into your mobile phone so that you can transact immediately after an onboarding journey. Those type of things are really difficult for a large tier one financial institution where a lot of their core systems are batch-based processing, and you'll onboard, but a week later or 2 weeks later your card will arrive. And the newer banks are instantly issuing a token into the smartphone so that you can transact and use it. So those kind of projects are really exciting for us. We're working on expanding into the South American market actually around some of the legacy core systems there. So we're really excited about the ability to help these tier ones introduce new innovative tech into their world with low impact to their business as usual and low impact to the customer. The customer will just start seeing these new capabilities come through, and they'll improve their brand affinity for the bank that they already trust. So I'm excited about that.
Yeah, that is extremely exciting. And when you put it like that, the ability to innovate is there. We're seeing neobanks do it. The question again has to come back down to this organizational inertia that we see that is still so much a part of the legacy of traditional banking. As much as banking has tried to rebrand itself as modern and agile and nimble and flexible, it sadly is none of these things when I see the innovation, where the innovation is happening and who's really driving that innovation. So as a last message for leaders in the banking industry to start thinking very critically and to self-reflect on how they get there, what would that message be?
So I would say hats off to the people that working in the banking industry from a technology and operational perspective. It's a highly complex environment with many moving parts. So, it's often seen so trivial in conversation, just replace your core. But, if you can imagine from the legacy days, those cores used to do everything for the bank, they from CRM to loyalty to, the transaction processing, etc. And these days, those are very specialized areas which offer very specialized services. So, I would say my message to the industry and bankers working in the ops tech space in banks is that to lean on the specialists in those various areas, in CRM, in loyalty, in banking product definition, in operations, in technology, and be as collaborative as possible with the specialists to help, the customer at the end of the day, you get the benefit of what is a really complex environment that has many integration points with many moving parts. So I would say if they could focus on that collaboration with specialists, I think is the key message.
Sergio, thank you very much. A fascinating discussion. Thanks for sharing those insights on a very complex area, as you say, this intersection of technology and finance, and look forward to seeing how the work that you're doing at FutureBank and Global Kinetic continues to shape the future of banking. Take care.
Thank you very much.
Well, I trust you enjoyed this week's episode of the Monocle Banking Podcast, curated as always by Monocle Solutions. Remember to like and subscribe and share the podcast far and wide as we bring you thought leadership from the front lines of banking. From me, Michael Avery, take care.